Hey everybody, welcome. It is the 8th of May. Mark Coe for you here, and wanted to take a look just because it's the beginning of the week. We did get stopped out. We were short E-minis last week on our daily model, and I like to show you good and bad. I like to show you what happens, but not that it's ever fun to get stopped out, because I assure you it's not. We went short the E-minis a week ago at the Sunday night open, which was the 1st of May trade date. 23.81 and a quarter. We were stopped out on the gap open higher last night, and we did not get out on the stop number. We got out a tiny bit higher. We got out the opening price 2402.50. So it cost us 1,062 plus our commissions there. So leaves our P&L down a little bit from a week ago. Not a great start to May, but we can deal with it. We're down $1,000. Leaves our rolling P&L since September up 117,000 for the time period. We're working a sell dollar CAD limit order as we speak, and that's all the model has going. So I just wanted to make sure I always update what we said on the model. Wanted to take a look at, as we start the week, I wanted to take a look at a few markets that are trending and have a look at what things look like when they turn, right? From an uptrend to a downtrend, from a downtrend to an uptrend. Let's take a look at gold. Gold turned for us in kind of mid-April from a bullish bid market into an offered market. And so what I want to take a look at in gold is to kind of recognize some of the signs that come along with a market that's turning momentum-wise. And let's take a look up at the top portion of it first so we can see what did happen and kind of some of those elements that start to occur. So what we had in the beginning of April, we had a bull gold market that kept making new highs, kept going buyers in control. And so what I'm marking here early April is top edge action that keeps being taken out. And what many of you who will be familiar with my work start to realize is that what I'm doing as I'm marking price, as I'm marking what's going on, I'm just looking at consolidation. And a market is either trending up, trending lower, or it's consolidating. What we see here in gold is a market that was trending higher with periods of consolidation. But within each period of consolidation, the edges that would be taken out would be to the top side, right? The edges that were won by the buyers. So kind of towards the third week of April, what started to happen is when you would get this consolidation higher, you actually had a level where sellers would win it, right? And so this comes on the European elections. Gold gaps lower, equities gap higher, dollar yen gaps higher, euro gaps higher. So it all occurs on the same weekend. So it's the April 23rd evening, it's the Mondays, the April 24th that it opens. But what this creates is a consolidation level that buyers no longer control. The sellers now control it. And so taking that reference point and moving it forward, all you end up with is a continuation of sell side wins the consolidation. And that's really how we determine who's controlling the market. When you see the periods of consolidation, you say, okay, top edge, bottom edge, it's all consolidation. We've come from the top, we consolidate, we move lower. Who wins the battle at the edge? The buyers don't win it, sellers don't win it, then the sellers finally get it here on the 1st of May. That pushes us lower. Now we're actually starting a bit of a trend, right? This all occurs around 1260. So it takes us from 1260. We create another edge. No real consolidation, just a little bit of sideways trade. Who wins it? Sellers. This creates your downtrend. Here's the next period of consolidation. So I'm using about 1236 on the top side. This was the gap open last night, so that's kind of a strange price. I'm really using 12.25 to 27, about a $2 area to mark bottom edge action. So here's what you would look for in the first signs of a gold market turning more bid than offered. You would look for top edges being taken out. And what does that do for you in the short term? Well, what it does for you in the short term is it gives you a bias to trade from the long side of the market. We haven't seen that yet. We've seen some bottom edge action hold in gold, but we haven't seen it turn. Crude oil is a market where we've actually seen it start to turn a little bit. Crude oil started to turn a bit on Friday. We've been in a very offered market in crude oil. This market's been sold off pretty aggressively from the mid-50s. Right, so here's our mid-50s in mid-April, 54 to be exact on the current contract. We traded down below 44 on Thursday night, Friday morning. The difference is when you find these little levels of consolidation, and it's not massive yet, but remember the whole point of the video is to say, what do things start to look like when they turn from a bid to an offered market or an offered to a bid market? We're looking at turns, right? We want to be proactive in looking at this stuff and saying, okay, how is it going to look if buyers take out a level? And so here in crude, you had some consolidation. Now it was tighter, right? On a 4-hour chart, it may look a little bit different, but working down to a 1-hour chart, what you can see is some consolidation. And once you see that consolidation occur, the question you ask yourself is, well, who wins the level, right? And it was a bit of a strange evening on Thursday night, Friday morning. You had some massive oil longs capitulate here, but you can still mark this consolidation zone. So the answer is, who wins the consolidation zone? Well, sellers get it initially, and then I call this a rejection of lower prices, which just then throws it back into this level, right? So now you're just back in your congestion area. Same thing here. If sellers had got it right back below, you would have called this a rejection. But they don't. The buyers control it. So what buyers are now looking to do is come back up to this challenge area, 48.15, right? Buyers keep making new highs. They keep holding the edge, but they have to maintain it. So what we're looking for is the dynamic of what starts to change and calling it an offered market to a bid market. And when you recognize that change, that's the way you want to be positioned in the market. That's the way you want to look to deal. So we came in Friday morning, we were looking to deal from the long side. We came in this morning in the room and we were looking to deal from the long side. Only long sides from edges, not just arbitrarily in the middle and not paying momentum for certain. So use that, do some work on it, see what you think of it, but it's something that I think you have to be able to recognize going from a trending to a sideways market and then reversing that trend. And those will be some of the elements that you start to see getting put in place. So for the 8th of May, kind of a quiet day all in all, Monday. For the 8th of May, I am Mark Coe, and cheers, and I will talk to you all soon.